Hi everyone. Today we're going to talk about capital loss carryovers and how they can be a silver lining in this storm of really difficult market conditions in which we find ourselves. A capital loss carryover occurs when we have more capital losses in a year than we have capital gains. And a capital loss occurs when we sell a crypto asset for less than we paid for it. To explore this issue, we're going to look at Tammy taxpayer's situation. Let's assume that Tammy has zero capital gains this year, but she has $53,000 in capital losses. In this situation, Tammy can deduct $3,000 of these excess capital losses against her ordinary income, which is great because our ordinary income, like salary and wages, is taxed at higher rates than our long-term capital gains are. Short-term capital gains are taxed at the same rates as our ordinary income. So that leaves Tammy with $50,000 of capital loss that she can't do anything with this year. However, Tammy is allowed to carry over that $50,000 capital loss to subsequent years. So next year, let's assume for a minute that Tammy has $10,000 of capital gain. Remember, she has $50,000 of capital loss carryover. She can deduct that capital loss carryover against her capital gains to the extent of the capital gains. So in other words, she can reduce her capital gains to zero for tax purposes, and this will still leave her $40,000 of capital loss remaining. From that $40,000 of excess capital loss, she can take, again, $3,000 of that and deduct it against her ordinary income. This would leave $37,000 of capital loss to carry over into the year after that. So that would be year 3. In year 3, let's assume that Tammy has $60,000 of capital gains. Well, she has $37,000 of capital losses that she carried over from year 2. And so she can deduct that entire capital loss against the $60,000 of capital gains in year 3, leaving her with a $23,000 capital gain. So all of those opportunities to deduct the capital loss carryover against capital gains are beneficial because they reduce the tax that will be paid on those capital gains. To determine the amount of tax savings from a particular deduction, we take the amount of the deduction and we multiply it by the applicable tax rate, and that will give us the dollar amount of tax saved. So in year 2, Tammy had a $10,000 deduction against her capital gains as a result of her capital loss carryover. And so we take $10,000 and we multiply that by, let's say her capital gains tax rate was 15%. So $10,000 of the deduction multiplied by 15% is $1,500, and that's the amount of tax actually saved as a result of that capital loss carryover deduction. Now, it's important to remember that the same rules that apply to the normal deduction process of capital losses from capital gains applies to these capital loss carryovers. So for example, you can only deduct a short-term capital loss carryover against short-term capital gains, and you can only deduct long-term capital loss carryovers against long-term capital gains, except for that $3,000 that we've talked about, that if you have an excess capital loss over capital gains, you can deduct up to $3,000 of that against your ordinary income. So that's a discussion of capital loss carryovers, and remember, it's not tax advice, it's not legal advice. On a different topic, if you are really struggling right now as a result of losses that you've experienced, please go get help, whatever kind of help you need. If that's going to talk to a counselor, if it's going to talk to a therapist or a psychologist, psychiatrist, a really good friend. You're important, and we want you to be happy and healthy, and you can make it through these difficult times. We all can. I wish you the best, and I hope you have a great day, and if you can do something to go out and help somebody, that'd be great.